everyone, welcome back to my channel. Welcome back, Lewis. Back again for another video. So today what we're going to be talking about is how each of us invest in the stock market. So not literally how we do it. So it's not going to be a tutorial. We're just going to have a conversation about why we invest differently, the reason why we invest, and how we actually do it. Maybe like discuss our strategy and how we invest in the stock market.
Yeah, like different platforms, what we do, that kind of stuff.
And maybe why we're choosing to do that particular way as well.
Yeah, exactly. Yep.
So if you have not already, please make sure that you do click that subscribe button down below, as well as give this video a big thumbs up if you enjoy seeing Lewis on my channel. I have to say that my most popular videos have you in it.
Yeah, I don't know what's going on there.
I don't know if that's saying something about you or me.
Yeah, I'm not sure.
Is that they don't like me, or is it that they like you? I don't know.
Maybe they just like us together.
Maybe they like us together. All right, let's jump into today's video. All right, so I guess I'll start. So the reason why I actually invest in the stock market is probably very similar to you. I just want more financial freedom. And like I am obviously, I'm not self-employed. I work for the government. I'm a teacher, so I'm a Department of Education worker. So I do get superannuation. However, in my mind, I don't want to have to work until I'm 65 in order to be able to retire. For me, I'm happy to work until I'm 65, but for me, it's about choice. And with the stock market, if I live off my dividends, that gives me the choice in if I want to work full-time or part-time or casually as a teacher or not even as a teacher, whatever. So that's how I feel. Like that's my reason as to why I'm actually investing in the stock market. That I would like to eventually, maybe in 10, 15 years, whenever it might even be 20 years, that I don't necessarily retire, but I have enough money coming in through dividends that it gives me the choice in whether I would like to work or not. Yeah,
I mean, I'm pretty much the same. Like I run my own business, so I kind of have to manage my own retirement fund, I guess you could call that. So I'm similar to you, like I could set up a super, and I do have super from my old previous jobs, but again, I kind of want to speed up the process. Like I don't want to get my retirement fund once I'm 65. Like I want to try and speed up the process as quickly as possible. So for us, we're both like really into the financial independence movement, like retire early.
And it's not even like about retiring. Like I feel like that's a really negative connotation that's with that movement. It's about having choice.
Exactly. And I guess like you can invest and you can like substitute your income. So it kind of gives you that freedom to maybe take a day off work, cut down hours. Can
I tell you a quote? There's a quote that I found on Instagram or something, or whatever it was. A day invested is a day where you do not have to work.
I like that.
It's like, it probably comes across that we might be a little bit lazy, but like we're not lazy. It's about choosing what we want to do with our lives, because you only get one life and you should be living it as best as you can. And if I decide that I no longer want to be a teacher anymore and I want to pursue, I don't know, maybe I do want to pursue financial
planning or something.
Planning or something like that, then I have the choice to do that.
Like I can't see any of us stopping working, because I love what I do, you love what you do. I don't get bored. It's just the freedom to kind of maneuver and change things or even take time off, or it's just the freedom really. And investing in the stock market is like a really good vehicle on how to get to that destination. So I guess we can talk about like how we do it, because we've spoken about why, but how do you do it?
So mine is obviously going to be a lot different to yours. It was a year ago that I had credit card debt, and I only just got out of like paying off a car back to my mum. So I'm kind of starting from scratch, whereas I know that you've been investing for quite a long time, and I only really learnt about the stock market and like financial freedom and financial independence maybe only about a year and a half ago. So I'm still quite a newbie. And for myself personally, I'm choosing to build up sinking funds and emergency funds first before I fully dive into my investment portfolio. So what I do at the moment is anytime that someone uses an affiliate link, for me with either Upbank or SPACESHIP, all of that money goes straight into SPACESHIP, which is a micro investing platform. which means that you can invest as little as you like or as much as you like without having a brokerage fee. So normally if you do invest in like a bigger platform like Self-Wealth or CommBank or something, you will have to pay, it's like $10 brokerage fee every single time that you invest.
Yep.
But with SPACESHIP, you don't actually pay any brokerage until you reach the threshold, which is $5,000.
Yeah.
And then after that $5,000, it's 2%.
Yeah.
I think it's 2% brokerage fee. So for me, I'm starting off really small. So I'm starting with a micro investing platform just to get a bit of a feel of it as well. Like I want to see how different industries perform and, you know, how volatile the stock market really is before I commit to investing, you know, like my savings every single fortnight, which would be, I don't know, a couple of $100 every single fortnight into the bigger stock markets. And
it's like a good way to get your toes wet. Kind of get a feel for how to do it and like what is like most comfortable for you as well.
Like, and especially if you don't have a lot of money to invest, you know, you could do, you know, $1 every single week or $10 or $20 or whatever it is, and you don't have to have that commitment of a couple of $100 or $1,000 every single month going into the stock market. Like you can go as slow as you want.
100%.
But still be able to get a feel for the market and see how volatile it really is.
And I guess it's just the action of doing it.
The habit.
The habit, because really like kind of following on from what you said, like for myself, like I invest on the 15th of every month. And that's called like dollar cost averaging. So whether the market's skyrocketing or plummeting, I always buy on a set day of the month. So if you kind of zoom out over like a long time period, you kind of buy the average of the stock market, which is kind of like a very conservative and like long-term strategy. So that's pretty much like what I do. It's
time in the market, not timing the market.
Yeah, exactly. And I guess for like SPACESHIP, like they have their own like catered, like high growth, slow funds, don't they?
So they invest kind of like what you do as well with like the top 100, top 200 performing companies in Australia. So whatever's not performing, I know that A2 Milk last week dropped by 83%, which was huge. But then it was Australian Ethical company, whatever it was, it grew by 50%. So like they do the same thing, is where they switch out those that aren't performing well with those that are. And it also gives you a list of every single company that you are investing in, because it's not them investing, it's you investing in what they have chosen. And it's just it's easy. It's not scary. There's not a lot of lingo that they use, so it is really easy to understand, especially if you're new to the investing world and you don't really understand a lot of the lingo that people use.
And I feel like when you say you invest in the stock market, people are like, oh, like you're gambling, all this kind of stuff. But I think the thing that people like don't see is that like pretty much 80% of most people's super is in the stock market.
It is an investment.
And I guess the next thing is like, well, like what stocks do you pick, that kind of stuff? I mean, like for myself personally, I don't pick any individual stocks whatsoever, because I do see that as quite risky, because that pretty much relies on my talent to pick good companies.
I feel like that's not really, I mean, that could just be my opinion.
There are like...
not necessarily a talent. I feel like it's a bit of luck and talent.
I'd say it's like 90% talent, because there are like long-term successful investors out there like Warren Buffett and Charlie Munger and like Monish Prabhai, where they do like pick undervalued companies and you can get like quite good long-term like returns.
I just got told.
I'm just saying, like...
No, it's true. I didn't know
but
that.
I feel like there's only like maybe a small percentage of people that can do it well. But yeah, I think you're right. Like for most people,
the everyday Joe Blow.
You're right in that regard. Like I feel like most people are like, oh, like I heard this tip, like this company's gonna go.
Like it's already gone. If you've already heard it from someone else, it's gone.
Like unless you're actually like analyzing the management, the profits, the long-term history of the business, the projected earnings, then that's like the actual way to do it. But for myself personally, like I just can't be bothered doing that. So I invest in index funds, so it's pretty much the complete opposite. So you really don't have to think at all about what companies to invest in. So an index fund pretty much automatically invests in the top 100 to 500 companies in a particular market. So there's different ones out there. So for myself personally, I invest in like the top 300 companies in America, and they're all kind of weighted differently on how big they are. So this includes like Facebook, Google, Apple, and all of the like big companies in the States. And then I also invest in the Australian stock market. So that's like the biggest 200.
AFI, is that AFI?
VAS.
VAS.
Yeah, but this isn't financial advice. That's just like what I do personally.
Yeah.
And this is like it's considered like a very conservative and like safe approach, because if you're investing in the top 200 companies, if one of them goes broke, you're not obviously going to lose all your money. They're just going to fall off, and then the next
it'll be rebuild.
Yeah, the next one will just be the next company. The next biggest company will replace them.
Yeah.
Because like 30 years ago, the top 200 companies are most likely none that are around today.
Different to today.
Yeah. So it automatically picks the best performing stocks.
Yeah.
Kind of thing. So it's a very like easy passive way of investing. So like once you pick what you want to invest in, then you just pretty much repeat the same process every month.
And I think that once I've built up my sinking funds and my emergency funds, and I'm happy to, invest that money, like my savings in, not my savings, but like the money that I don't need for my sinking funds or my emergency fund, that's the kind of strategy that I'll be using as well. So once I've built that up and I'm more comfortable to invest more money into the stock market, that's what I'll be doing. But for myself personally, I feel that getting my sinking funds built up and my emergency funds done before I even think about investing will be more comfortable for me.
Yeah.
Because if something was to go wrong, or if, Christmas is coming up and I don't have enough money for Christmas, like I don't want to have to pull money out of my portfolio to pay for it.
Yeah.
So for me, I want to have all the money that I will need for the year done. So then every additional dollar or anything can just go straight into the stock market.
Yeah, and I was the same as well. Like it took me a couple of years to like save up an emergency fund, a sinking fund, before I even thought about investing in the stock market. Because like you said, I didn't want to have to sell out as well, because I think for both of us, we have like very like long time horizons.
Yeah.
Like I don't, like anything I buy, like I never plan on selling it.
Yeah.
Like I know a lot of people like, buy and hold for 6 months and kind of keep that process going. But for myself personally, like if I really like to reinvest the dividends, reinvest the growth of the company, so then you can to get that compound interest, because that's really like where the investments, like that's the main benefit of investing in the stock market, is that you get that compound growth over the long term.
Yeah.
And I think that's just really like interesting. Like you can start just like really, really low, and then you'd be surprised how much
quickly it built up.
Yeah. And it can grow to like quite a large number if you just let it sit, let it do its thing.
Yeah.
And as long as you can kind of like sit through the crashes.
Yeah. And not panic.
Yeah, because I guess you only lose money when you sell.
Yeah.
And like for something to completely crash, like the Australian economy or the American economy would completely have to fail for you to lose your money doing like a passive investing strategy. And I guess at that point, if that was to happen, like you wouldn't really be worrying about money, because things would like really be hitting the fan. So yeah.
But I think that also as well, and like this is something else that I'm going to be doing too, that any additional money that I do bring into my account, I'm going to be putting straight back into investments. So you may have just watched an ad on this video, and even those like 3 cents that came from that ad, that will be invested, because I don't want to make money to then spend more money. I'm making more money to invest that money.
Yeah.
To then in the future make that money so that I can live off it. So that's kind of also one of the reasons why I started YouTube as well, is to like educate people and, talk about all these different things, but as well as to get that additional side hustle money to put into investments.
Yeah.
So anytime that you do, click on an ad or whatever, know that that money is being invested wisely.
Yeah.
Yeah.
Yeah, I guess like the stock market investing can seem so complicated.
Yeah.
And I guess it can if you try to invest in single stocks and people trying to like sell you courses and stuff. But at the end of the day, like if you pick like a passive investing strategy, it can be very, very simple. Because if you diversify across different industries and different countries, then it can be like very safe long term. Like of course there's going to be like bad days, like just like the weather, like bad weather comes, cyclones come, but if you zoom out and look at the weather long term, like it's pretty good. Like if you scale out. So
as long as you do it responsibly and like you you have an understanding of like that investment is for the long term, not the short term, if you want to see real stable gains.
Yeah, yeah. And I guess you kind of do have to have like a strategy before you start. Yeah. Because if you're just like, oh, I'm just going to buy this, do this, don't have like a time horizon or a strategy, then...
Don't have a goal.
Yeah, then I guess you can fall into the traps of like, you know, get quick rich stocks and that kind of stuff and speculation. So, yeah. Is that all we wanted to cover?
I don't know, I think so.
I think so.
Yeah.
I don't know, I guess we're just making a video just kind of like...
We just wanted to have a chat, really.
Yeah, just having a chat, yeah.
Because we are really, really interested in this kind of stuff. Like we have a particular idea of what we want our life to be like, and we don't want it to be stressful. We want it to, we want to just be able to have options. I don't want to ever have to just continuously work for the man, just to work for the man.
Yeah.
Like I want to live my life the way that I want to live it. And like if I have to sacrifice a few things now, I'm happy to do so. So then in 10 years we can get in our van and travel across Australia and New Zealand, and we can work remotely because we've saved enough and invested properly that we can just live off our dividends.
Yeah.
That's the life. That's my life that I think of anyway.
The dividend life?
The dividend life.
Yeah, well said.
Yeah.
Couldn't add anything more, so.
Yeah. All right, guys. Well, thank you for joining us in today's conversation.
Yep.
Leave a comment down below. Are you investing? Did you enjoy this type of chatty video?
Yeah.
Do you actually invest? If so, how do you do it and why do you do it? I think it's always really interesting to know like why people do what they do. Like why do you choose to invest? Is it because it's something that you're just interested in?
Yeah.
Or do you actually have like a proper end goal?
Yeah, exactly. And also, if you have any video ideas, please share them down below, because we were thinking like, oh, what should we make a video about today? And that's where this video came out of. So.
And we really do enjoy filming together as well. Like I have so many ideas of what I want to film by myself, because this is my YouTube channel.
Yeah.
Just remember.
Yeah.
But we really do enjoy...
I'm slowly encroaching.
I know. I feel like we should just start one together. Maybe. Guys, like this video if you think that we should start a channel together. I reckon we could do that.
The budget millennials.
Couple. The budget millennial couple.
Yeah. I can see it happening.
Yeah. All right, guys. Well, thank you so much for watching. I hope you did enjoy today's video, and we will see you, I guess, sometime in the very near future.
See ya.
Bye.